On Wednesday, U.S. natural gas futures fell to $2.20, following a 2.4% gain in April due to a rise in domestic gas output and reduced heating demand. Furthermore, energy traders have observed that gas futures are being pressured due to a 5% decrease in oil, gasoline, and diesel futures prices. The decrease in prices is driven by concerns about the economy as U.S. politicians discuss ways to avoid a debt default. Investors are also preparing for another U.S. interest rate hike this week. This is occurring simultaneously with warmer seasonal weather, which is decreasing heating demand, and the closure of LNG export plants for spring maintenance, resulting in a reduction of gas flow. Gas flows to the 7 big U.S. LNG export plants have dropped to an average of 13.5 billion cubic feet per day in May, down from a record 14 billion in April. The decline was mostly due to reductions at Cameron LNG's facility in Louisiana. Meanwhile, meteorologists have projected that the weather in the U.S. will shift from colder than normal to near to warmer than normal from May 6 to 17. With the weather turning seasonally warmer, analysts have forecasted that U.S. gas demand, including exports, will decrease from 95.4 billion cubic feet per day this week to 91.1 billion next week. Meanwhile, dry natural gas production from the Haynesville Shale play in northeastern Texas reached new highs in March 2023, averaging 14.5 billion cubic feet per day, 10% more than the 2022 annual average of 13.1 billion. Haynesville gas production currently accounts for about 14% of all U.S. dry natural gas production. The Haynesville is the third largest shale gas producing play in the United States, behind the Marcellus play in the Appalachian Basin and the Permian play in Texas and New Mexico. The rise in active gas-directed rigs in Haynesville in 2022, as reported by Baker Hughes, followed rising natural gas prices. Nevertheless, drilling costs in Haynesville tend to be higher because gas wells in the play are deeper than in other plays. This means that natural gas prices would need to be higher to make drilling in the Haynesville Shale economically feasible. This could result in a decline in gas production from the Haynesville Shale play over time, especially if natural gas prices remain relatively low. From a daily technical perspective, gas is currently trading below the pivot point of $2.25, indicating a new resistance level. If the price continues to trade below the pivot, it could signal the presence of sellers, which may result in a near-term decline toward the support level at $2.15. Conversely, if the market manages to sustain a move above this pivot, it may suggest that the buying pressure is increasing, potentially leading to a surge toward the resistance level at $2.40 in the near term.